How's it going, everyone? Today is Tuesday, really early morning. Got some sleep in early. Decided to start the day extra early. So today we're going to be discussing the game plan for indices going into Tuesday and then the rest of the week. We had a really successful day on day trades today, Monday rather. Hoping to continue that streak today. Now, what has happened since the last video? Well, we had a proper breakdown of the uptrend, right? So I was saying pay a lot of attention to this uptrend. We are on the verge of breaking down. We're below the EMAs. We are below this critical SR level at former all-time high. Um, Other indices and other major, you know, asset classes are feeling a lot of pain, specifically crypto. Even gold is dumping quite a bit. So nothing is safe right now. Um, that being said, now after this dump, it's not quite as simple and cut and dry as saying, well, we went back down. Now that means it's fucking over. Sell everything. We're going to the pits of hell. Because again, you have to always be aware of that. Where's the path here? Of the break retest. So we had the break. Now, the ideal bearish scenario would be a retest of here, and then we go lower, right? What could happen, obviously, and you need to be open to this, um, is that, we broke down. We again do the retest, but instead of failing, we actually get acceptance and go higher and take out all these market structure levels and just, continue on the bull market. It's also very likely. I think the downside is a little more likely. However, we have to be open to this. Again, trading is a reactive business. It's not like very predictive. Where the predictive power comes in is like on macro trends or, narratives or themes or all this stuff. But that takes so long to pan out and is usually like a, a prediction of whoops. Um, a prediction of trend and direction rather than like something specific like oh it's gonna hit this level and then reject, you know what I mean. That this stuff, leave it to reactive trading. So as of now we are just in this tight downtrend range. Sorry. Price continues to go lower. We are forming some bull divs as price goes lower, which is bullish. However, however, do not be fooled by a bull div. A bull div is only really relevant when you have other confluences going with it. Now, and also a bull div should be showing up on across multiple different time frames in order for you to have even more confluence for it. So on the hourly, we're showing bull divs. On the 4 hour, we are not. On the 4 hour, this is lower RSI. So that means that the overarching uh, trend, that is the 4 hour is bigger than the 1 hour, so it's a bigger trend, is actually more bearish than the smaller one. So what does that tell you? It tells you that, it's not safe to rely on this 1 hour bull div to tell you, whether or not the stock market is going to bounce here or not, right? You need some really good confluences either with multiple divs on multiple time frames, or divs in combination with a market structure or the EMAs, or volume patterns, or candlestick patterns and stuff, but we're not getting any of that. The really last bullish candlestick pattern that we had was this 4 hour close um, for the Monday session. Huge doji with like a hammer doji with a long wick below it. That is pretty bullish. You can see the last time that happened is over here on the 7th of November and instantly resulted in a huge pump. However, consider that this was the same trading day. So this just kind of went continuously. It had the opportunity for bulls to just step in and pump the price higher. Now we had this hammer doji, and likewise over here again, but look what happens the next time. So we had it over here. It's bullish. It just continues, melts through the EMAs, gaps up into them, takes it as support, and then continues up, right? This time we have that hammer doji. What happens when it gets into the EMAs? Rejection. Rejection here, 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 here. Literally every single 4 hour candle, we fail to close above the EMAs, right? That's informing my bearish bias. Likewise over here, look, we form a hammer candle. And are we able to even get close to the EMAs? No, we're actually going lower. We're just following this downtrend over here. So, um, yeah, the bull divs are just not sufficient to be bullish right now. In addition to that, then we are obviously below the uptrend, right? Below the uptrend, that's bad. We need to be above it to be bullish. So I'm expecting price to continue up into this critical level for the uptrend around here. Um, Either that or it just completely fails at this EMA right now, and then we continue making lower lows and lower highs. Bias is obviously bearish. I'm going to be targeting puts that are going to be near lows, if not even lower, depending on how ambitious I am and how the order flow is looking. Not really interested in any longs unless I get some really good RR opportunities in terms of the market structure. Um, so as far as like support, I don't really see any clear support coming in up until around this area here. So you can kind of see resistance here, support, relative support here, support all the way here. We haven't touched it yet since breaking out from here. So I'm expecting 6,600 to be the next real target. As such, I'm going to be positioning for that. So playing shorts for either 660Ps or just trading SPX directly. As this continues breaking down from this uptrend, you also have to be very aware that the downtrend is going to get nastier and nastier. So it's not going to be a slow grind up like this. You know, you always have to keep in mind that saying, you stocks take the stairs up and the elevator down. Especially when you have a huge, almost year-long uptrend like this breaking down, this can take a free fall. This can go parachuting off the Empire State Building. So we're going to be looking for that. It's going to have a lot of really good opportunities to short and make some money. For any bulls that are watching this that feel sad and dejected about maybe the bull market ending, don't be, dude. You can make so much more money being short. Like it's stupid how much money you can more money you can make being short. Like I mentioned this in the other video, but we had a play that at its peak, we sold these for like around 220% average, just still insanely good. But we had a couple of shorts that came in earlier that if we held all the way to the bottom over here, this low that I was aiming for, 671, that those went up over 1,500%, over 2,000% even. After that second average downfill. So, by the way, check out that video to get more insight into that. It was a really good trade. We're probably going to be doing a very similar thing today, and we're using the exact same levels effectively. So, highly recommend you watch that video to get some insights into how we're trading this. But yeah, puts and downside, just because of the volatility increase and because of the nature of downside moves, that is stairs up, elevator down, you can make a lot more money being short. Like pip for pip that the stock is moving, being short is going to be better, specifically when trading options and stuff, and short selling obviously. So yeah, that is the recap. I'm probably going to be doing one of these every single day for this week just because, as I said, like indices are so important right now. I don't give much of a fuck about anything else because if the indices are hurting, as I said, everything else is going to be. So it's just a given. So find when the indices stop hurting, and that's when you'll find when the stocks stop hurting. But yeah, thank you very much for watching. Good luck in your trading today. If you guys want to join an awesome community with a huge number of people that have a passion for this, enjoy learning, are actively engaged, and also just really want to make money, then feel free to join our Discord. The link is in the bio. Peace.